You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and sometimes beyond and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com. If I sound a little bit different, it's of course because we're not coming at you from our studio. We're still in Chicago, but we're down the street here at the Trading Show Chicago. No rest for the wicked for us. We just did the Swan Advisor Forum, then the Options Industry Conference, and now that wasn't enough. A few more days here at the Trading Show. I'm amazed I still have a voice. Check in with me at the end of it and see how much of a voice I have left. But next up on the network is another newcomer. He is Michael Ourabah, the CEO over there at BSO. Michael, welcome to the program.
Thank you very much, Mark. Hi, and thanks for having me on the show today.
And Michael, as we want to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the financial space and what it is you guys do at BSO.
Sure, absolutely. So we are a global telecommunications operator, an infrastructure provider for the financial community and the capital markets. I founded the company back in 2004 in Paris, and we grew the network and the footprint organically since then. It was kind of right at the time where electronic trading became popular, and there was a big shift in the industry towards that. And we took a good look at the infrastructure market, and we realized that the big telco incumbents, such as the level 3s and others, when they happen to have a low latency fiber between key interesting locations for the capital markets, then they would market that. But they were not necessarily thinking at how to address the market globally and support the ecosystem. So everybody was fighting for Chicago, New York, London, Frankfurt. We took kind of an opposite stance and thought, you know what, we're actually going to do the complete opposite, and we're going to serve the other 100 exchanges that are spread out in the rest of the world in emerging markets.
More of a blue ocean type strategy.
There we go. and build the lowest latency path between Western Europe and North America into these regions and intra-regions. So here we are now, 15 years after, with about 300 POPs on net worldwide on our network in over 45 countries. Numerous market-leading routes and enabling many prop trading firms, market data providers, tier 1 banks, or anyone in the ecosystem willing to expand in the emerging markets. We're the go-to partner for them most of the time. Our product portfolio ranges from very traditional Ethernet private lines and layer 2 network type services into much more extreme low latency type services on our RF, millimeter wave and microwave networks. In particular, we have a market leading product on the New Jersey Triangle between NASDAQ, MAWA, and Carter, MAWA, and Secaucus to serve the 3 big equity exchanges. So, and we're expanding, of course, that RF technology into many other markets, including Aurora, Cermak, a few others in Canada between TMX data centers and Nasdaq Canada in Equinix TR2. So you see, we try to expand and push the footprint more and more, and more recently, actually, with the new asset class that crypto gives on the market and the way trading happens in the crypto industry. There's tremendous opportunities actually for a carrier like us to help the crypto market be a bit more attentive to their needs, and their need is to have more and more liquidity in it. But if you want to attract liquidity that comes from institutional money, you need to have a much better way to access the stock exchanges and the crypto exchanges and matching engines than going over an IPsec VPN over internet. Because they cannot clear their position in case of a massive DDoS over internet or things like that, which we both know is a big problem. So we recently acquired a new company. We're going to make an announcement probably today or tomorrow, the press release of that company, which operates a massive SDN network worldwide that connects all the public cloud instances in all regions. So whether it's AWS, Microsoft Azure, or GCP, they already are connected everywhere. And the overlay of their SDN application, our global financial footprint, we're going to roll out a completely automated, auto-provisioned private bandwidth network from any capital markets data centers or liquidity venues into any instances in any public cloud regions. So, for example, somebody that's trading from NY4 or Aurora at CME and wants to trade some crypto exchanges in AWS Hong Kong or Microsoft Sydney, they can insert on our portal straight the instance of the virtualization cloud instance of that crypto exchange. They receive automatically by email the LOA to run the cross-connect in CME or NY4, and it's provisioned instantly for them. Once they're cross-connected, we can run multiple exchanges over the same cross-connect, and it's provisioned instantly. So it's going to give a massive opportunity for having deterministic latencies to these exchanges instead of having random underlying internet routing and latencies, and guaranteed availability and SLAs to be able to be there and clear our position in case of an issue.
There's a lot to unpack there, but we'll start. You already answered my first question, which was going to be, why is someone who's here focusing on the low latency HFT battle here in the States? Why are you headquartered in Dubai? But you already answered that question. That you started out going the opposite way, which is kind of fascinating. And we have a lot of guests over the years, you might imagine, focusing on the domestic side.
Sure.
But we haven't had a lot of guests, focusing on, let's say, outward in here to the U.S.
Yep.
So walk our audience through that a little bit. What's that been like developing and building out for the low latency market and low latency trading outside of the U.S.? Is it a lot of the same players, same race to zero that we're seeing here in the U.S. where everyone is spending orders of magnitude to shave off a millisecond here and a millisecond there, or is it a little bit different scene abroad?
No, it's actually a good question.
That's why I get paid the big bucks.
Yeah. We can probably segment that in I'm going to segment it in a few answers, but the first one is more a generic macro answer to your question on the market trends. Clearly, North America and the US in particular, this is still a massive amount of the liquidities and the trades worldwide. So let's be clear, it's still our biggest market in terms of revenue and profitability. But as the HFTs were seeking the alpha, when the margins were shrinking because of a very bullish market and going upwards trends markets, we really enabled them to enter all these emerging markets like Turkey and Istanbul, Moscow, Eastern Europe, Sweden, the Middle East with Dubai, Saudi Arabia, Israel, India, of course. That became a massive play for options between CME and NSE and BSE over there. DGCX, obviously, in Dubai for everything that's options gold related. And all the other locations, of course, like Johannesburg, Malaysia, Taiwan, mainland China, of course, with the Shanghai Futures Exchange. And it was mainly driven by Western Europe and American top HFTs that wanted to expand in these locations to seek that alpha. And it actually made a barrier to entry for newcomers and new HFTs that are much smaller and nimbler from the emerging markets to enter US or these markets very difficult, because the low-hanging fruits were already taken by these massive US players that were picking that in their market that they were competing before. So we kind of had starting to have this conversation with them where they were, how can you help us become as big as the top 3 Chicago HFTs? We said to them, well, you know what, that's an interesting thing. we can be an enabler for them to enter these markets in a more nimble way and cheaper way, because we have done so much R&D on our side to have feed handlers running on FPGA for our RF networks and all these very niche and specific products. So we're starting as well providing these type of products that are feed handler as a service for CME or other locations where these guys can't spend $5 million to develop for the next 3 years and still maintain competitiveness in their own markets. So US and European going outwards, yeah, that was happening since early 2000s. But overseas coming to the US, there's been two trends. The first one were regular capital market HFTs, and then the crypto prop trading of Asia, because there's many of them in mainland China, in Hong Kong, Singapore, India. These guys are actually the ones that come to us and say, wow, you know what, we know nothing to the capital markets, but we understand that if we want to be ahead of the game, we need to enter that space. But how can we do that? Because we are Generation Y people that's been trading over the public cloud, we're DevOps people, we don't know about all that stuff and all the regulatory requirements, how to deploy an infrastructure in these markets. How can you help us do that? So that's a trend that's been growing in the last few years. I would say actually year, even, as crypto is booming. And yeah, that's the trend.
You know, that's fascinating to hear, because we have a lot of people come on the network talking all aspects of crypto, as you might imagine, front ends, back ends, execution, brokerage, all these other things. No one's really come to us to talk the connectivity side of crypto. I think there's a couple of reasons for that. First off, I think the inherent technology, right, is a bit of a limitation. Yep. Blockchain is the biggest roadblock you're going to have. It can do, a handful of transactions a second versus the orders of magnitude more you see on most general financial type ecosystems. Yep. So I'm guessing they're not coming to you for the low latency side of crypto, but it sounds like more the latter, what you're saying, the infrastructure, getting them build up, the regulatory side, maybe things, you're right, that they haven't traditionally had to deal with.
Well, yeah, there's that. And there's also, well, you know what, they still come for low latency because they realize that they're starting to. We made a PR about a few months ago with a company called Kaiko that you probably know. They use us now for their market data infrastructure in our cloud platform, and they use our network to seed and seek the market data from the crypto exchanges, because latency matters in that instance because they need to be distributing that in an efficient manner. And when you start arbitraging multiple exchanges at the same time, because the crypto it's very much scattered, the cost and the price is dependent on various factors that each exchange consider to be the leading one, but the trading firms need to be able to cherry pick what's good. And latency starts to become a play even there, because I know that the completion of a transaction is dependent on blockchain, and time of processing is pretty high. That said, sending an order and executing an order and making a decision to order, latency has a play in that.
So that's more like the custody side. You guys are going to start playing in that arena too? Because you're right, there is a huge gap there. It could be minutes, hours. Sometimes I hear horror stories of days. Yeah. So if you could add something to speed up that process, I'm sure people will be beating a path to your doorstep.
Absolutely. And we also speak with some other people that are doing custody as a service, stake as a service, brokerage and all their members. They're actually thrilled at the idea to access a pool of users for their own service that they can't reach over internet. Let's say a big tier 1 bank that's in NY4 and Cermac, they want to connect to these guys to execute, but they can't do it over internet for their own regulation with their regulator. And they need guaranteed primary, second, and third path. So they leverage us to be able to do that. So that's actually the next stage, which is a crypto extranet that we're building, where we're going to have the major crypto players connected to us on an extranet, and once you connect to us, you can reach all of them on a portal by enabling connectivity to them.
One-stop shopping for all the various crypto.
That's kind of our intention and our goal, yeah. It's in the roadmap. We're still not there yet, but probably a couple more months, and we'll be ready to put it out.
It's interesting. I've been kind of taking the pulse of this from everyone who comes in on the institutional crypto side, because we've heard different things about institutions' demand, appetite for crypto out there. Obviously, end of 2017, when it was racing towards 20,000, everyone wanted to get into it. When it started, shall we say, plateauing in 2018 and then coming back down to maybe 10,000, we saw maybe some of that demand starting to ebb. And then, of course, now in the last month, it's had a bit
back
upturn again. Yes,
yeah.
Exactly. So I'm curious for you, as someone who interacts primarily with institutional players, did you see a drop-off in crypto demand over the last 6 months to a year? And also, maybe conversely, have you seen an uptick as a result of the recent uptick in the underlying?
So on the institutional side, you can probably break it in two again. You've got the IB and capital market side of these institutional banks. They're going to follow the wind and where the market trends are. It's a no-brainer. It's their own money, it's their prop money, so they're going to do whatever it takes to make money and stick the alpha like an HFT. And the other side is like really the wealth management and the private banks side of these big banks. This is where most of the cash is located, obviously. And it's following the trend of what their customers, which are the ultra-high net worth individuals or private desks or family offices, and how they want to diversify their investments. And I suppose that we start to have the conversation with their private bank side that say, you know what, we have a problem. We need to find a way to execute and buy cryptos because they want to hold assets in the crypto world. How can we do that? And that's when we start to have the conversation, and we thought about that ecosystem, because they were like, how can we do it? We don't know how to do it. We can't do it the way we're being presented right now. We can't do that. We cannot. So that's when we started that thought process, and we're seeing more and more demand. And it's actually coming from the Asian branches of the private banks, because there's a lot of billionaires in India, China, that want to diversify and get out of the local currency over there. They're not very easy to FX on large volumes. So they convert that locally in China and then exit with these large amounts, but they want to give it in custody with a big bank where they can leverage themselves and then do many other things. So that's basically a requirement that's been driven by the UHNWY individuals.
So you're seeing a lot of the growth coming out of Asia. It sounds like the demand growth coming out of Asia, and then I suppose the infrastructure, the plumbing coming out of the more Western side. And I
Correct.
guess the two are meeting in the middle. I guess that's where you come in, right, Mike?
That's where I'm coming from, and also where the money comes from, because at the end of the day, that's the driver of everything.
And you're headquartered in Dubai. Is that just a logistical thing, or is there a growing crypto scene there as well?
There's a big growing crypto scene in Dubai. Many players. I'm not based for that reason. I'm based over there because I'm halfway between Europe and Asia this way, and I can easily commute everywhere. The company is headquartered in Ireland, in Dublin. So
I was going to say, I detected a little bit of an accent for you, not from the
French.
Dubai region.
No, I'm French actually, so my accent is a bit mild, but I'm French. I'm from France. We got offices in about 12 countries. So we serve locally many of the demands in regions. But we opened Singapore and Hong Kong this year, and the commute from Europe was very painful, so obviously it was a natural fit for me to relocate somewhere where it could be halfway between Europe and Asia and pilot that efficiently.
And aside from speaking to me, which I know is a tremendous feather in your cap there, what is it that brings you to Chicago and to the trading show here? Are you just looking to show the flag? You mentioned you have some announcements coming out. You're kind of checking in with a lot of clients. What brings you here?
Yeah, absolutely. It's a mixture of all that. We've got a very large amount of customers in the trading community in Chicago, of course. We work with the exchanges. They use us for their infrastructure as well. We work with the brokers, market data providers, front-end providers. We're pretty much at the core of any network infrastructure that this whole industry relies on. So it's a good time to take a pulse with the clients, see how they are, they're happy, what they want to see more from us, spread the good word of all the R&D and the good new products that we're pushing around. And at the trading show, of course, it's the yearly checkpoint with this community and where we can have an audience at the same time and promoting that. We've got that big announcement coming on. We've got a second one that's going to come probably next week as well. Bad timing, but we can wrap it up for the show.
Do you like to leave our audience a little bit of a tease, Michael? So if you want to give us a little bit of a hint, a little bit of a tease, you kind of touched on one already, but if you want to leave them wanting
Sure.
more, as they say. If you want to
of course,
leave them with a little bit of a hint of what's coming down the pike from you guys at BSO.
Absolutely.
Now is the time, sir. The floor is yours.
So yeah, we're clearly working on. So the first announcement is that acquisition of a new company that's going to come this week, if not today. The next announcement is a new asset that we've been developing and building for the last 18 months that we're going to come and go to market with. It's going to be pretty. It's a brand new route.
A new asset.
Yeah, a new asset we built, which means a new route we're going to bring to the market between two exchanges, lowering the latency. So that's going to bring quite exciting new trading opportunities for the clients, and plenty of other stuff I can share. So we've been doing a large amount of investment in R&D on our radio for the RF side of things, and we're going to have a high-capacity network pretty soon deployed in the New Jersey metro area.
Music to the ears of a lot of our U.S. audience
absolutely.
here, Michael.
So let's say we're going to have near 20 gigs of capacity on the triangle. That's going to be pretty exciting because we can then serve quite a large amount of new products to the market. We were always capacity constrained, which means that the choice of the trading instruments that were sent on the RF network between these three data centers were limited. You were cherry-picking the high opportunities that you knew were going to have, and you were limiting yourself, especially on the options side of things, to be honest. That correlate a lot with other markets, and you were missing on opportunities. So that's going to have this extra 30% of profit that you can go seek with that, I suppose.
And Michael, people want to learn more about these announcements you just mentioned that are coming up, or maybe want to kick the tires on your services for themselves. Where should they go? What should they do?
We're here at the booth, obviously, so anybody can come to get more information from Kim and Steve that are based. Kim is based in Chicago permanently. Steve is based in New York, so the two of them are leading the point of contact for anybody willing more details, and anything that's going to be pretty technical. Our head of RF, Callum Gowan, and myself can answer all these very highly technical questions and answers.
Is it just BSO.com they should go online?
Oh, yeah, BSOnetwork.com. That's the way to go. You can find all the details over there. And we don't advertise a lot of information publicly, but the best is to reach out to one of the team members, and we're going to be able to drill and dig deeper in all the details because I know they're very detail savvy.
Well, Michael, it was a pleasure having you on, learning a little bit more about the low latency side of the crypto space.
Absolutely, it was a pleasure to be on air with you.
And I'm looking forward to seeing how all these initiatives you just mentioned, how they unfold in the marketplace in the coming months.
Perfect. Thanks very much.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.